The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the September 17th. Wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. It's absolutely fantastic to be with you here this morning. I hope everyone had a terrific Tuesday. Let's make sure that you and I, that we do all that we can do to have one heck of a wonderful Wednesday. Now, one of the best ways that we can start off our day is to always remember a great Chinese proverb that goes like this: those who play the game don't see as clearly as those who watch. So in trading and investing, it means we need to look at both sides of the trade. And then you and I, we can go hunting for the bulls and the bears. So for the next couple hours, I'll do all that I can do to share with you extraordinary tools for trading and investing. Those include our lightning bolt pattern, that A to B equals CD tool. We'll look at Fibonacci expansion and retracement. We'll take a look at Gartley. Of course, the combination of those two are what make up the Gartley and butterfly patterns. We'll look at Japanese candlesticks. The reason being is that bulls and bears leave signs for you and I each and every day. We'll go count the Chapman wave, peaks and troughs. We'll look at TAS market profiles, the Rhodes momentum trading signals. We'll use every tool in our arsenal. You might have a couple tools as well that you'd like to share with us. So just give us a call at 877-927-6648. Internationally, that number is 727-445-1044. Together, you and I, we can go hunting for bulls and bears. This is Wonderful Wednesday. Of course, it's TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures. They're trading up about trading down 1 full point out here. S&P futures, they're flat up 50 cents. NASDAQ futures down a quarter. Russell 2000 off just slightly. King dollar back 9 pennies. Trade out at 84.13. Basically a flat market in the currency world, with the exception of the Great British Pound. We've got a little bit of movement there, so we'll go check in on that. Of course, we'll check in on that Euro-Japanese yen currency pair as well. Got Goldilocks up 20 cents, no movement there. Silver down 4 pennies, no movement there. Light sweet crude off 18 cents, no movement there. Natural gas, that's a whole different story, up 1% right now. That's up 4 cents. A quick peek across the globe out here, we're going to find out, is over in Germany. The DAX is up 34 points, only 0.3%. Kind of interesting after our markets had such a, well, some of our markets had such a big day yesterday. The DAX really didn't participate much in it yesterday, didn't participate much in it today as well. We'll go see if there's any meaning behind that. The FTSE itself is off 5 points right now. The Nikkei last night down 22 points. The Hang Seng up 240 and the Shanghai up 11. Let's actually go start off international. Let's go take a look at that DAX. Let's see what we've got out here inside of the DAX. What do we know about the DAX? Well, if we take a look at the DAX off of its session highs, what do I mean, session high? How about off of its high out here from the trading session of June 24th? If we go take a look at that, go take a look at the retracement from that high down to the low that was put in here on August 8th. What we know is that there was a 0.786 retracement that was put in on this indice. It has not taken that out at this stage. Now, typically, you make a 0.786 retracement. That can be an area where you start an A to B equals CD to the downside. However, thus far, there's really been no price damage inside of the move off that 0.786 retracement, off of that high from September the 8th out here. Not even close to a dead cat bounce out here. Nowhere near a 0.382 retracement inside of the DAX. So yeah, didn't really participate much with regard to the little rally that we had inside our markets yesterday. And nor is it really doing that today. But at the same point, really not providing us with any information about what the DAX is doing. Hey, sorry about that, but that is the way that it is as we take a look at the DAX. Let's go check in on the FTSE. What do we have going on in the FTSE as we speak this morning? Well, we know about the FTSE is that it's weaker than the other indices around the world. What's Stevie mean by that? Well, if we take a look at the FTSE's been traveling in a very large consolidation. The top of the consolidation is up at the 68, 67-ish range. The bottom of the consolidation right around the 6,500 level. So you get a nice consolidation out there. If we go from the session low, meaning the August 8th, not session, why am I saying session out here? How about if we go to the swing point low, that swing point from August the 8th? I can't get session out of my mind, huh? If we take a look at that August 8th low all the way to the high that was put in inside the FTSE on September the 4th, well, in fact, that has done a 0.382 retracement. But what did it do yesterday? What was its action yesterday as it made that 0.382 retracement? Johnny, Tell us what we've got out here. That's right. We got a hammer candle. You got a hammer candle that formed here yesterday at that dead cat bounce at that point, 382 retracement level out there. That is a bullish candle. That says the low here from yesterday is muy importante. 67.4809 is the number there. If you see a close below that, if you're long, you are wrong. At least that's the expression that we like to coin around here. And what would that mean? Well, certainly it would mean moving down to the 0.618 level, 66.72. But more likely, because there's really no floor out here that has been built, more likely you'd see move all the way back in that August 8th swing point. Are we there yet? No, we are not. Do we have a hammer candle inside the FTSE? We do, and you want to pay attention. That's a bullish sign out here. They're only making a very small retracement. Is there an important message there? Yeah, I'd say there is an important message there. That's what's going on inside of that indice. If we go take a look at the Shanghai out here, Shanghai up 11 points last night, up about 0.5%. What's the Shanghai? What work is on its plate out here? Well, you got that key reversal session that took place 2 days ago, not yesterday, but the day before. I do have some volume out here. That's interesting. Didn't used to get the volume here. But now it looks like old E-Signal's got the volume. How about that? I'm going to have to check that out with Tom and see what kind of volume he's got on that. So that's a beautiful thing. Now, up at the session high inside the Shanghai out here, that took place September the 16th. If we take a look at that was a key reversal session. Key reversal session, as you know, you've got to come from an extended condition. Well, it was. If we take a look at that price, if we take a look at that RSI reading, that 14-period RSI reading out there, so we got that. We saw a close in the opposite direction of where price was coming from. And you had the high and low exceed the prior day session. So you get a bearish engulfing candle. That engulfed 6 sessions out there. And so that says its high hurdle out here is to get over the high from September 16th. And that price point is 24.5804 out there. I don't know. I'd have to check with JL. I don't think that when I pull up the index like here and the cash index that the market profiles are accurate. Just part of the template that I've got set up out there. So let's not pay attention to those. If we take a look at the Hang Seng, up 240 points last night, what did it do? Well, it created a little bear separation candle, created a morning star, a reversal signal out there. You might not recognize it as such, but that is, in fact, what it did. So this little setup right here is actually a bullish reversal signal, and that's inside the Hang Seng. What else has the Hang Seng been doing? Well, it looks like it has been a little bit of consolidation pattern on its own, with the lows being down around the level of from August 8th, right around that 24,190 level, and the highs being up about 25,228 out there. That's what's going on inside that market. Okay, now let's go check out our markets out here. Where are we going to start first? Well, I guess where Stevie would like to start first is let's go check in on the currency pairs, because you got to take a look at the euro Japanese yen before we really do anything out here. Now, what's interesting about the euro Japanese yen, number one, it correlates to our market better than any other currency pair. So this is the carry trade. And what we have here with regard to the euro Japanese yen, just as we do on the 120-minute chart and other time frame charts for the ES yesterday, was it broke through a rising price channel. Now, it did it with conviction, meaning the euro Japanese yen. It did it with conviction on September the 12th. Oftentimes, you break a diagonal or horizontal level of support or resistance. You like to see price come back and pull back into that, then just simply confirm that it's on its way. Now, it looked like maybe a couple days ago we might see that take place, but that is not the case out here. And right now, you've got the euro Japanese yen, quite frankly, trying to take out its swing point high, its most recent one from September the 12th. And that's at a price level 139.20. You see a move above that. That only bodes well for the bulls. I don't care if the market is moving lower. In fact, that just simply sets up a better buying opportunity out there. So you got to keep your left eye or your right eye. You just got to keep one of your eyes inside of this currency pair, the euro Japanese yen. Why do we need to do that? Well, because we know about these divergent patterns that exist inside the marketplace. And when they exist, we got to find out who wins that tug of war. And it has always been clear that who wins that tug of war, it is the euro Japanese yen. That's the top portion of the chart out here versus the ES mini, the bottom portion of the chart that we're taking taking a look at. And right now, we've got a diverging pattern and a breakout of a descending price channel out there. I believe that does carry a strong message. We'll see if the market believes that as well. Now, if we go back and we take a look at what's going on inside our futures marketplace right now, if we go take a look at the ES Mini, we go take a look at the S&P futures out here, up a buck right now. We take a look at what is it likely to do today. Well, what it's likely to do today, we can see it's trading up towards its market profile resistance level. That's at that 1994 level. The reality is, well, why is this missing some data out here? That's not that's a weird thing. Let me switch over to a different chart out here. You got to love that. Of course, I've got a backup. That's really interesting. I don't know why it's missing that data. It doesn't matter. I can do it without that data. The heck with it. But during this break here, I'm going to try to pull up a different chart so I can actually do it with filled-in data. This is Steve Rhodes. This is TFNN. And if you think we're having just too good of a time here, well, then join us. Join the party. Give us a call at 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. TigerTV.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. No real change in the futures market out here. Dow futures up 8 points right now. S&P up 1 3/4 points. I put if you're watching this on Tiger TV, and I hope that you are, what I did was I went ahead, switched over to my other charting application out here, the Ninja Trader platform, of course, all being fed by eSignal. So I don't know what happened with that eSignal chart, but it doesn't matter. I've got backups out here. You got to always have a backup plan, right? I drew, if you're watching us on Tiger TV, thanks so much for doing so. If you're listening to radio, your mobile device at TFNN.mobi. We appreciate that very much. Of course, you can catch the live stream of this show by going to the right-hand side of the TFNN homepage out there. You can click on the button. You'll see this show streaming live. And, of course, while you're over there, go ahead and sign up for our trading contest that we have with Nadex out there. You can be a winner even if you don't trade much. We've got winners every day. You just have to place a trade out there. It's the easiest way to make some shekels out there. So get over to the homepage at TFNN.com and go ahead and sign up for that. And, of course, if you're watching us now on Tiger TV, I drew a black line across my screen out here. We don't draw any red lines out here. Of course, there are red lines on the chart, but you know what I mean when I say that. I'm telling you, the key level out here inside the ES Mini, 1995.25. That's the red line. That's the black line that Stevie is drawing in the sand out here. You see the ES Mini take that out, stay above that. I will tell you that it's bullish action that is in place out here. Of course, we got Janet Yellen. She's going to be on the stump, I think, at some point in time today, or there's going to be release of minutes or something along those levels. But here's the reality with regard to all the news events out there. I had a nice conversation with a good friend, good Tiger last night. And, I think what we both agreed with is this. When you and I, when we go take a look at these stock charts here, and we go back and we take a look at candle formations, we take a look at A to B equals CD patterns, we take a look at all of these things that take place. Can you really tell me what the news was that took place out here on August the 18th or August the 19th? Or any of these days for the most part? There are some days where you might remember some of the news, but the reality is if we can just simply get our heads out of the sand, out of the news, because we're technical traders out here, and we just pay attention to the technical patterns out there, that will go ahead and that will do ourselves justice. Let's not worry about any of this other stuff that's out there that just simply pollutes our mind when it comes to trading and investing. So that black line out there at 1995.25 inside the ES Mini, inside the December contract, I believe that is important. Hey, look, just as important as the 2003 level. At 2003, you've got that market profile high. Right now, we're trading right into the market profile point of control where you got the largest volume. So you've got the largest number of buyers and sellers that are comfortable with this price here. We could stay in this area for most of the day until some news event comes out, if you will. What did we get inside of the ES Mini as we speak here yesterday? Well, look, you got to close above this Rhodes momentum indicator signal out here. In this super bull market, they are hard to come by, and that's a trading session here from September the 12th, and it said any close above 1991.50. That put us into a little buy mode. Now, yesterday's close out there happened to be 1991.75. Oh, but by a quarter out here. You know what? It'll prove itself to me when we see a close, when we see the market, the ES Mini staying above that 1995.25 mark out here. Yeah, there's a little bit of resistance overhead, but this could be setting up the next A to B equals CD to the upside out here. I don't know if it will, but if we get above that level, we get above 2003, you can bet your sweet bippy on it that is likely what the outcome will be. And that's if we take a look at the daily chart for the S&P futures contract. If we go take a look at the Dow futures, let's go take a look at that out here. Now, the Dow futures a bit different than the, of course, because you've got the adjustment for the rollover in contracts. Let me see. Will I get any data on the September contract out here? Let me see. Let me see what will pop up on the screen. Oh, yeah. So we're going to actually take a look at the September contract just to really go ahead and put things in perspective out here. And if you take a look at the September contract for the Dow, because we're really looking at that quarter's worth of data on my screen right now, hey, guess what, folks? You're trading well above resistance. Well, I can't say well above resistance. 17,132 is the number, but yesterday you closed above its market profile high on that time frame. You also closed above that little shooting star out there. And let's face it, the Dow had the most bearish of patterns out there. It had a 3 drive to a top pattern. For goodness sakes, that is as bearish as you get. There's nothing more bullish than a failed bearish pattern. And other than an island top reversal, it's pretty hard to get much more bearish than that. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say You can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We have about 17,148. S&P up 2 at 2001. Composite up 4 points at 45.57. Russell 2000 up $1.60. Trading out 11.52 out here. We've got Auxilium Pharmaceuticals. How about that? Really butchered that. Up 41%. No butcher there. They must be at a buyout there, or they just cured something out here. Yep, that provides an update on the merger. There you go. All right. FedEx, however, there's no merger out there. FDX is the ticker symbol, up a nice 4% this morning, up $6 and change. We'll go check in on that. How about United States Steel? X marks the spot, up a total of 10% this morning out there. There's a big move, up $4. We've got, what's behind that? I don't know. We're going to go take Aegis Pharmaceuticals. That's up 8%. DuPont, Nemours is up 4%. GoPro up 4%. YRC Worldwide up 13% out here. To the downside, though, disappointing perhaps on the numbers. Rackspace holding up 15%. Holy shnikes out there. Probably down with volume as well. Let's go take a look at Rackspace Holdings. Gapping down, almost creating an island out there. An island unto itself, but that's not the case. Volume so far today, 2.9 million shares out here. No, it looks like Rackspace wants to go visit its friend down on August the 28th. That's a high volume low, untested, 12.6 million shares. Looks like Rackspace is headed down into that area out here. Take a look at this little consolidation inside of Rackspace out here. That consolidation, boy, talk about struggling at the highs. You know where the bears are camped out inside of this equity, right at about the 40-50 level out here. We saw that price on December 12, 2013. There was a bit of volume, a bit of selling on that day, selling really on the next day. That had volume out there of 10 million shares last time. Then the first time up was back on February of 2014, February 10th. That was up with 8 million shares, couldn't hold price, and that's where it went ahead and made a low out here. Net low also has not been tested. Not so much that one's a high volume low. That's back on May 9th, May 12th of 2014. Hey, had a nice little sign of strength out here, but boy, ran into the wall, the brick wall at that 40-50 level. Looks to me like what Rackspace Holding is likely going to do is going to get back into that August 12th swing point, maybe even the bottom of a consolidation pattern out here, and that would take you down into the 26-ish area, and that is on ticker symbol RAX. We go take a look at Sunco Logistics. Let's go see what has not been invited. Apparently, they did not get the invitation that the market was reversing course yesterday. Sunoco Logistics Partners down 5% out here. I see they're losing ground. I don't see what the news is behind it. Oh, they're issuing more paper. Hey, why not get that paper out before we get the big wallpaper from Alibaba out here? Nonetheless, big volume because of that wallpapering job that they're doing in Sunoco. Now, I don't think that's the Sunoco of the gas stations. I think, are those still around as a kid? You know, nothing like Sinclair gas stations out there. Remember that? The green dinosaur and all those great toys that they had out there. Why don't gas stations have toys anymore for our kids? What's up with that? In any event, this thing, if it doesn't hold this area here, could easily head down to its swing point. And that is from August the 1st out here, down in the 47-ish, 45-ish type area. And that is on Sunoco. Let's go see what else has not been invited to the party out here. You got Adobe Systems, ADB, You got to love their products out there. You ever use Photoshop? What a great tool. Of course, we all use Adobe, their PDF files out there, and so many other great tools. Nonetheless, Adobe is trading to the downside, down 3% off $2 this morning, trading into a swing point, and trading into an area where it broke out from. Let's go ahead. Let's clean this chart up. Let's go ahead and remove some of the tools out there, just so it's a little bit easier to see what, in fact, Adobe is doing out here. I want to get rid of that tool out there, but we'll leave the volume. We'll go ahead and leave it like this. So if we clean up the chart, get it so it's nice and dark, nice and black, and let's go add some nice bright colored lines to it. The colored line we're going to add to it is where it broke out. So it's pulling back into a breakout area. That breakout was high volume. It's a high volume high. Let me pull this back just a little bit further without actually drawing more lines. That would be a nice, smart thing to do out here. Is that's all-time high? It looks like it is in Adobe. So Adobe on a daily, maybe even a weekly. We'll go check it out on a weekly momentarily. But on a daily chart, it's got a swing point high, the top of which has not been tested, and it's got some volume up there, 11.3 million shares. So once Adobe can figure it out, it will go up and test that 74.69 level. At the moment, it's just pulled back to the breakout area. Remember that breakout area? You got to use really a range here. You don't necessarily have to use. You like to see it hold the bottom of the or the top of the consolidation out here. Man, you'd think I could get this thing to paint a line for me. There we go. You'd like to see it actually hold that window, but hey, it doesn't really have to, and if it doesn't, it means that the window's been repaired. But really, this is just simply an equity pulling back into a area where it has most recently broke out from. But today's volume is going to be key. So far, 1 million shares. Remember, the number you're looking at is about 11 million shares. So this thing needs volume to really dissipate out here. Could be a bit of a consolidating pattern out here. But overall, the stock chart looks pretty good. Let's put this on a weekly chart. Let's go see on a weekly chart what kind of volume Adobe Systems has. And yeah, it's got an untested high volume high, even on a weekly basis out here. So it looks pretty good for Adobe Systems. Just kind of maybe somebody making way because of the nice run that it's had out there. Maybe somebody needs a little bit of capital for that Alibaba IPO out here. Hey, Wynn Resorts continuing its move down out here, off another $2 this morning. Let's go check in on Wynn Resorts. Wynn Resorts, we're on the weekly chart out here. It's now trading towards a weekly swing point area, and that would be the week ended November 18, 2013, anywhere from 157 to 167 out there. So about a $10 move that it has in store for itself to the downside is what it looks like on its weekly chart. Let me see what the volume here over the past couple days. Volume yesterday accelerating as well to the downside. No reversal candle there. We got an A to B equals CD. Says 161.45 is its price target. No reason to believe otherwise as we speak at the moment. Now let's go do some celebrating out here. Let's go see what we got moving to the upside. You got the FedEx out here. FedEx gapping up this morning. Looks like they generated revenues here of what did they generate revenues? Come on. Net income $606 million, up 24% from the prior quarter. That's up nicely, and operating income revenues $11.7 billion versus $11 billion. So you got a lot of people sending out packages out there or utilizing that Kinko's, now that FedEx store. Boy, FedEx here had a confirmed A to B equals CD to the upside, gapping up into the 1 to 1.618 level as we speak here this morning. Trade out at 161.20, 161.23 was that price projection. But let's go put this on a larger time frame. Let's go see what kind of patterns we've got setting up for us inside of FedEx. See if there's any kind of exhaustion in place here. Maybe not. If we take a look at FedEx, did it take out a weekly B point with volume? That weekly B point December 20th, or December 30th, 2013. Oh, great. We got a holiday week. So now what do we do out here? Well, let's go take a look at that swing point anyways. 144.39 is the number. 8 million shares out there. Passed with 6 million shares. Nope, that didn't do it. 10 million shares, though, on the very next week, June 23rd out there. We're going to go ahead and give it the benefit of the doubt. 10 million shares taking over 8 million shares. And what does that say that we've got here, Johnny? That says 181.95 over the long haul, 196.58 inside of the move, inside of Federal Express out there. Let's go check out the monthly chart. Monthly chart, let me see if maybe there's a little bit larger A to B equals CD pattern to the upside. Let's go check that out. We're going to start down there with that March 9th March of 2009 low. That's going to be our A point out here. Our B point looks like we'll come all the way up to July 1st, 2011. Slight pullback into a nice big old bullish engulfing candle on a monthly chart from October the 1st, 2000. Yeah, the monthly chart says it's not done either. It wants to get up that 168 level. That's your 1 to 1.618. A to B equals CD tool, and that is inside of FedEx. Let's take a look at U.S. Steel out here. X marks the spot, up $5 right now, up 11%. Hey, I got a monthly chart inside of U.S. Steel. That looks pretty good. Where's she headed to? Well, you got some swing points out here on the monthly chart. That's likely its target February 1st, 2011, anywhere in that price range of 54.67 to 64.03. So it looks like it's got some more room to move to the upside. But let's take a look at this on a daily chart out here. The daily chart for Federal Express. We can go ahead and turn back on some of our tools out here just to get some additional feel as to what's going on. How about this? Is this, well, let's actually turn them off, because is this a third gap inside of U.S. Steel? I don't know. I just need to turn off some, let me turn off that A to B equals CD tool. That would be kind of interesting. And the answer is no, it's not. It is only gap number 2 out here, and so you got a nice huge sign of strength that took place on the daily chart back on July the 30th. That had 28 million shares to the upside. So far this morning, as you can see, 5.9 million shares, so it's got some juice in it. U.S. Steel well off of the bottom out there. That is for certain. Let's take a look at what do we got here? Agios Pharmaceuticals. See what Agios Pharmaceuticals, AGIO. No idea what's putting action into this, but that's up 7% this morning. It has sold off a bit from its high, but let's go take a look. So it's running right into a swing. It looks like a bit of a consolidation top up here. So it's got its work cut out for us as we take a look at it. What does Stevie mean by that? Well, if we just take a look at the trading session from this is it's a daily chart we're looking at. The trading session from March 7th, 2014, out at 49.79. We can see that area is acted as resistance, and we can take a look at a breakout level. That breakout level also happens to mark approximately the consolidation low, as long as I can get the tool to work for me. There we go. We're going to move that up just a bit here. You got that little support level, 31.39. So if it can't take out 49.79 out here, you do have a little hammer candle that formed inside this equity on September the 15th. And that says that low out there ought to act as support, 41.86. If, in fact, it closes below that low, you know the expression, if you're long, you're wrong. What does that mean? That means that we're going to head down to about that 31.39 level, the bottom of the consolidation. That probably becomes your nice buy point for AGIO. That is the ticker symbol out there. So it looks like it has taken back some of the invitations to join its party as it has traded off of its session highs as we speak. Also moving to the upside, you've got KSU, Kansas City Southern. That's up a couple percent, up $2.68 out here. Let's go see. It had a nice little sign of strength here yesterday as it took out a B point with volume. It may have done that. Let's take a look at it. July 23rd, 671,000 shares out there. Yesterday, 1.4 million shares. That's the way you take out a B point. However, this also was this repairing the window. Oh, it most certainly had already repaired the work on this gap down out here. So Kansas City Southern giving us an A to B equals CD after it had repaired its gap down that had some pretty big volume. Hey, if KSU ever decides, so I'm not talking KFC, I'm talking KSU, Kansas City Southern. If this thing ever does gap down, look out below, because you're looking at a price test down at that $92.50 mark out here. But at this stage, this thing's got A to B equals CD. You can take the small one. You can take the large one. Let's go take the small. We don't need to supersize it. Let's take the small A to B equals CD pattern out here. Let's go see where that gives us a price target. Well, it's already done the 1-to-1 A to B equals CD, but you're gapping up into it with some good volume. 124.57, 129.31. That is next on its chart outs here. It looks like probably the 124 level, and that is on ticker symbol KSU. What else do we have popping? What else do we have dropping out here? Anything of significance? Let's take a look at Skechers. Skechers is off Skechers is off. Oh, we're going to take a look at that's General Mills, not that. That's That's not General Electric. Anyways, let's take a look at Skechers out here. Trading down with about 126,000 shares this morning. Let's go see what it is doing on its daily chart out here. Actually, not too shabby. Let me see. What do we got? Any reversal signals? Well, you got a big bearish engulfing candle that took place here on September 15th, but pretty much erased yesterday. Down with 759, up with 780,000 shares yesterday. Yeah, not a big deal. So it looks like this thing here just really traveling sideways. No real significant movements inside of Skechers. SKX is the ticker symbol. All right. So that's kind of a little market to wrap as to some of the equities here that are moving and grooving in the marketplace. We got the Dow up 35, S&P is up 5, Composite up 10 points, Russell 2000 up 5 as well. Looks like yesterday was not any kind of a what-hit wonder out there, and we may have just simply seen the beginning of the next move up. If we go take a look at that daily chart, Steve was going to go ahead. I'll put the I think I'm going to put the September contract up on my screen here for the ES in a moment. Let's go see what that thing is priced out at. Actually, I should have put the December up there. Can I do it quickly before the break? Come on, where's that ticker symbol? 1995 and a quarter. Remember, that's the number we want to be paying attention to. Come on. You're trading 1995 and a quarter right now. Right up against that resistance line. We'll go see who's going to win this game, the Bulls or the Bears. The tug of war is on.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 27, S&P is up 3. And let's go out to Cheyenne, Wyoming, to speak with our man Larry. Larry, thanks for calling. Thanks for holding. How you doing today?
I'm doing good, Steve. Thanks. Appreciate all the heavy work you do. I've got a question about, this may be pertinent to the market. I mean, that's why I'm calling.
Sure.
John Williams of Shadow Stats, he's pretty well known. He's got a pretty negative view on the economy based on, he calculates things in ways that used to be done before they substituted and hedonically adjusted. So he has totally different numbers. Like he shows unemployment at 22%. Okay.
Sure. Yeah.
Okay. So anyways, on his article number 644 of July 23rd, he claims, and he's crunched the numbers, and you've got accounting background, he claims when they put the revision in on September 26th for the second quarter GDP, it will also be negative as was the first. 2 negatives in a row is a recession technically.
Yeah.
And I just wonder, is that in the back of your head as you're trading, or what do you do?
No, well, it depends on what style of trading that you would do out there. And yeah, we all know that accounting firm Dewey, Cheatham and Howe. And so I totally get where he's coming from when he's creating, all those numbers out there. And really, I guess the point that I wanted to make this morning is that if you are a technical trader and you go take a look at a stock chart, I don't know about you, but I can speak on my behalf. My memory is not good enough to know exactly what news or what event took place, 2 weeks ago. Sometimes it's even hard to remember yesterday, right? And so the reality is what I do is just really take a look at what the chart patterns are saying. And if you're a technical trader and you just simply stay in tune with what the charts are saying and you just simply use the fodder of the news as an entertainment vehicle because you like watching the show, so to speak, then that's really how you should trade out there. Because if now on the other hand, if John Williams has a trading strategy based upon the data that he provides and whether to go long or short, and that's got a good positive expectancy outcome, then one should go with that system. But I don't know if that's really I don't know if that's the case or not. So I know about all the doom and the gloom and the this and the that and why the market shouldn't go up or what have you. But I just, are you a technical trader? Or,
that's why I'm studying. I'm just curious if you stash that away, but you really try not to have that in your head, actually, is what you're saying. I just want to get that.
Yeah, no, totally. Yeah. I try not to. My worst, ghost is listening to all that stuff. It may be true. It may be true, and I can buy into it. It's just a philosophy. But the reality is, we've got to focus on the charts and not let any of that stuff influence us. The influence needs to be what are buyers and sellers doing, what happens to support and resistance areas, do we pass B points with volume to maybe, what kind of patterns are out there. And I think that, Larry, if you and I do that, we will be much better off. Yeah. And we just use the other stuff as entertainment.
You got 1 minute. How do guys like Ralph L. Campora, I don't have a clue. He's a famous old-time technician. He's able to like go on TV and say the market will be much higher by 2018. And I know how to read monthly charts and trend lines and projections. I don't know. How does he know that? Is that just to build his reputation in case he's right, or what?
Well, I tell you what, we're out of time here. Will you listen in on the next show in the opening?
Yeah.
Okay.
Yeah.
I'll show you some charts that help us identify where price is likely headed to. How somebody can go ahead and make that projection. All right, my friend?
Okay, thank you.
Thanks, Larry. Hey, folks, stay tuned. The Money Master Show will be up next.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.